Well, hello there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this Wednesday afternoon market recap. Obviously, this week has seen the continuation of volatility. We began on Monday with the Dow Jones Industrial Average selling off 350 points. We had that high wave spinning top on the Tuesday, very close to our overall net short position at 17,550. It came very, very close, but we didn't move below that trigger. As such, on Wednesday, we have seen some form of a bullish bounce up 138 points. If I change to the weekly candle at the moment, the net movement is down 190 points. Give or take on the Dow Jones Industrial Average, it was looking very, very, very negative as at Monday and Tuesday. But now we're starting to develop once again that lower wick, which is somewhat expected considering that we haven't broken below the support area since March 2015. At the moment, this market is headline driven, obviously with what is going on over in Greece. Will they accept the proposed austerity measures come July 5th when they actually vote on the referendum as to whether they will or will not accept these measures? That is going to be the market mover upcoming and moving into next week. I really feel as though we will get crystal clear clarity as to what will happen with Greece and the Eurozone as at that referendum. It's really right now a vote for the citizens of Greece as to what they choose to do. As such, we're seeing these wild movements in price. Will Greek default? That was the major market mover on Monday. Then, of course, the indecision on Tuesday, and most recently on Wednesday, we saw optimism flow back into the market with potentially some concessions being made. At the moment, however, it's purely speculative, and if you cannot stomach the volatility, it's not really the right time, at least, to be getting into the market or jumping into a lot of trades. As you can see when we see these really volatile periods in price action, the net movement once again is down 190 points. We are sitting on the edge of some really severe technical damage being made to the market. If we do break below 17,550, hold on to your hats because this market will sell off. It will sell off very, very quickly. And the first target we will get to is 17,237. That also coincides with this long-term primary bullish trend which has established itself since the basing pattern in 2009, and as you can see, since 2011, 2012, the beginning of 2013, mid to late 2014, we've retested this primary trend line on numerous occasions. We failed to break below it, and we can expect moving forward that once again this is going to coincide as new macro support for the market moving forward. Again, we are not there. We haven't broken below that level, but I'm paying attention to, firstly, this one particular candlestick on Monday. Really, at the moment, I'm somewhat negative on the market in full disclosure, and the reason why is because whenever you see a candlestick such as what we have on Monday, it doesn't really bode well for the market itself. Sentiment is down. It is somewhat negative at the moment, and a lot of people are just downright scared. Because of that, I'm going to personally remain short, or at least have bearish expectations until we can break above the high of Monday's candle. That will really negate the sentiment which took place on the Monday. I'm not sure if we'll actually get there before the end of the week. The reason why is because we really only have Thursday's trading session. The markets close for a half day on Friday. They are closing at 1 p.m. And of course, the world is really just waiting for this referendum to really take place on Sunday in Greek to give us the better directional movement, at least, or the forecast moving further into the second week of July 2015. So that's more or less the market update. It's also transparent across the S&P 500 and the Nasdaq. You can see the same type of picture taking place. I haven't mentioned that this may set up some form of a bear flag. Generally, that would be the case if there wasn't all of these external factors going on. So I'm not going to sit here and say, look, to a high degree, this is a bear flag, because I think it's simply somewhat unreliable and unreasonable to suggest it is. It is taking the basic type of formation, but I'm not placing too much weight on that evidence to suggest that we are going to see a downward break immediately. If we change that to the Nasdaq, you can see once again we had some form of a rounding top up here, very close to our long-term bullish trigger, dating back or going to 5,169. Here we are at 5,000, give or take a couple of points. Very, very negative day on Monday. It really looks as again as though we're setting up a bear flag, but until we get that movement to begin next week, I'm also quite neutral to bearish on this market. We do have a small little gap, which is interesting. This is very, very bearish. We have what we call a rounding top or a dumpling top. And I will be paying attention to this. If we can break below 4,950, I'm not suggesting that it will happen on Thursday or even on Friday, but if that does occur, we're looking at least a retracement down to 5,851. If you want to understand or take a look at the bigger picture of the markets, I'd encourage you to have a look at Dow theory, have a look at that pro analysis discussion going back 2 weeks ago. And I also sort of touched on that once again this most recent week, but going over some individual trades, at least just referencing how to trade this market, it's very, very volatile and it's headline driven. You need to understand how we sit right now in the global environment. Because of that, I'm somewhat reluctant to be entering into new trades. I understand some have triggered, but just place your stops on those trades and more or less forget about them. We'll see how the markets move over the coming 1.5 days to round out the first week of trading for July. And I do hope, once again, that there will be some form of resolution, whether it's a Greek exit or even if they just kick the can further down the road, so to speak, and they do not address the underlying problems. And if they don't restructure the underlying debt, of course, this is just going to arise once again in the future, but it may delay the inevitable because we've been dealing with this problem in Greece really since 2010, when, of course, interest rates began to rise. When people realized, or investors, lenders realized that they were in trouble actually repaying the debt itself. Here we are 5 years later, and we're still dealing with the same problems. And it's really what's caused all of this havoc, so to speak, this increased volatility on the US markets and also the global markets. So I think I'll leave it at that for this Wednesday afternoon market recap. I'll bring any more advancements to you as at the close on Thursday if we see a big move either direction, but just pay attention to that. I mean, pay attention to the big long day candle on Monday, the long day Morobozu. Say to yourself, if we can break above it, look, then we've really negated this bearish sentiment which flowed into the market. But once again, we are sitting on that very critical pivot point where if we start breaking down below 17,550, then you really need to have that severe or serious discussion with yourself to suggest, well, are we going through some form of distribution? And I mean, it's really paying for that in terms of time. I mean, here we are since December 2014. I haven't mentioned also, if I change the year-to-date candle, we're down actually 65 points for the year. Here we are beginning the second half of 2015, and the market itself is down 65 points. We're left with some form of a doji candlestick right now. Almost a perfect doji candlestick, but I mean, this is quite rare. Very, very rare for a market to establish a doji candlestick. I know we're only halfway through 2015, but you have to look back in time and say to yourself, well, where was the last one which set up? And it was really back in the year 2005. We'll see what happens of it. You can't really draw too many conclusions from it. It's just very, very rare to see a market very neutral. Indecision, where you see all these white year-to-date candlesticks, and even when you get severe retracements back in the year 2001, 2002 during the dot-com bubble, or even throughout 2007, 2008 when you got the big sell-off, it's very rare to sort of be right neutral, smack bang in the middle of this, which is what the doji candlestick represents. So I'm addressing these markets as neutrally as I possibly can right now, and without sort of buying into all of the sentiment going on and taking place around the global markets, and just analyzing price action for what it is until we once again close below these pertinent levels, these really critical areas. 17,550 is critical, but if we close below 16,990, that is the writing on the wall for the market. I don't suggest we'll get there in the next 2 weeks. It may possibly happen. I'd suggest that will slow down at 17,237 on the Dow Jones before we get that movement, or we get a severe close below 16,990. I will quickly, once again, this has turned out to be somewhat of a longer market update. I will pay attention to the Dow Jones Transportation Average. The two bearish triggers we've had, 8,471, dating back to May 2015, has worked out really well. Even though I didn't personally trade this is just to gauge sentiment on the market. We had a secondary entry once again at 8,234. This market is somewhat rolling over at this particular moment in time. I've even said to you, look, when we get down to 8,000, my perspective on the Dow Jones Transportation is going to change. It's going to change immediately. The reason why is because we're moving back down to macro support. And if we do get here, I mean, we're very close. We're within 100 points away from our 8,000 target. As soon as we get here, I'll be expecting the bullish rally to flow back into the transportation average. Now, this is the main and very, very important part of this discussion on the transports. Do we set up a higher high? So will we break out above 9,250? That would be a 1,250 point rally, maybe over a couple of months. Can we establish and reclaim the long-term primary bullish trend? Or, and this is the big or part, very, very important, we've had this long-term primary bullish trend in effect on the Dow Jones Transportation Average. Will we rally back up and retest the bullish primary trend line from the bottom, set up a lower high, and then roll over? If that second type of outlook or hypotheses works out, then I would be very, very concerned on the health of the overall 3 US equity markets. Now, that is quite a long way away of happening. We've really been on the ball with this market since we failed to hold support back in April and May. You've seen what's happened, but this red line on my chart right here, I should change the color to red, but this red line right here is here for a reason. If we come down to support, we rally, come back up and retest this resistance line and fail as resistance, this sets up huge problems for the 3 other US equity markets, the Dow Jones Industrials, the S&P 500, and the NASDAQ. It may very well be some form of a long-term topping pattern across all 3 of the markets. But here we are. We haven't set up that pattern, and we're still yet to confirm the underlying price action. We have been spot on, though, and I just wanted to mention that to you as at this Wednesday afternoon market recap. What I'll do right now, however, is bring this recap to a close. I think I've covered everything that I needed to cover at this particular moment in time. Once again, if you do not feel comfortable trading through volatility in periods of uncertainty, I'd encourage you to just sit on the sidelines and be a spectator instead of trying to participate in this most recent market action. It's very, very hard to do so, and as such, a lot of people around the world in all forms of trading are unfortunately getting whipsawed. And if you cannot hold through some form of a retracement once you enter into a trade, it's best to be a spectator at this particular moment in time. It's not every day when you see indexes selling off over 350 points. I mean, or the NASDAQ selling off, what was it, very close to 120? I just need to get the right figure here so I'm not making figures up for you. 122. So, I mean, these are big movements taking place. Volatility is spiking, but we still are yet to make critical technical damage. The setup of a new lower low and what could possibly be that new lower high, respectively, moving forward into the future. I'll bring it to you as it happens. I have an obligation and a responsibility, as I will each and every week. So when the markets make their move, you'll be the first to hear about it. All the best, traders and friends right around the world. It is James signing off on behalf of Pivot Point Trading. All the best. Goodbye.